Are those who are planning to retire very soon, according to. But first, we are going to have an interesting and important conversation that could affect retirees. Are those who are planning more than, wait for it, $30 trillion in retirement accounts that are going to be coming out. Joining us to talk about what this all means, our great friend of the show, investment advisor, the wonderful J.B. Bryant. Hey, J.B.
Thank you so much. And I don't have snake earrings, Jeff.
There you go. Good.
I think these are going to be on a trend for folks, so I should have picked up a few extra pair. JB, it's always awesome to see you. I'm wondering if that calm view behind you is to just like have us take a seat and relax a little bit before we get started on this conversation.
How about Luke, the producer? He said, oh, the vacation pic. I said, no, man, that's what retirement looks like.
Oh.
If it does, then we're all ears, right?
All right.
He's so young. He didn't know. That's retirement.
He's got a minute until retirement, so we'll just paint this picture for him. But we're talking about some strategies for this year. As Bill said, the amount withdrawn almost seems staggering. How is that possible, and what do we need
to know? Baby boomers, yeah.
And really, it has to be withdrawn. They're back in the day, say 2 years ago, back in the day, you had to start taking withdrawals out of your retirement accounts, the tax deferred retirement accounts at 70 and a half. Now that was switched in the last administration. And then during the pandemic last year, the required minimum distribution was stopped. You didn't have to take it. But 2021, to everyone who is retiring and they're 72, or even if you're still working, and you have retirement accounts and you're 72, talk with your tax planner about the required minimum distribution. Because if you don't take it out, you will be penalized up to 50%. A 50% tax penalty on the amount that should have been withdrawn. And I have met people who their financial institution did not send them a notice that they had to take their required minimum distribution. That's not really their responsibility. Most companies do, but know that, I think it, was their local bank or something, and they didn't send them anything. But so then they all of a sudden realized, am I supposed to be taking this out? And they were in their 80s. They actually could face some huge tax penalties. Wow. So all tax deferred retirement accounts are subject to required minimum distributions. Your IRAs.
The RMD, as we lovingly call it.
That's right. That's right.
Yeah.
The RMD.
Okay. All right. So you were saying Social Security is a tax-free benefit, correct?
It is, unless your RMD is a large amount. Yeah. And really, if your non-Social Security income plus half of your Social Security income are over $25,000, well, your Social Security is really no longer a tax-free benefit. So, and $25,000 nowadays is not that much for provisional income limit. So your Social Security for many people is not a tax-free benefit. And a lot of times the required minimum distribution could really put you over the provisional income of being able to avoid taxation of your Social Security. So,
JB, is this the situation where some people say, if I go out and work, I'm going to lose money?
That's for people that have not reached full retirement age, and they're afraid that they're going to, when you're not at your full retirement age, to qualify for Social Security.
I mean, if you're getting your required minimum distribution and you're getting Social Security and you've got a job and you're going to go over that limit, so you're actually losing money by going out and getting the job?
Yeah, unless they figure out a serious tax strategy.
All right, I'm out, folks.
You can't say that they're losing money, but they're not getting the tax benefit. And there are some serious. You have to be intelligent to retire cost effectively, and I think that people have no idea how complicated it is. Like the income related monthly adjustment amount, that having high income. Now, Bill, this one will make a person get up. Like you,
don't encourage him, JB. He'll walk off again. I've never heard of that income-related monthly adjustment amount. What is it a tax? What is that?
That can make you have to pay more on your Medicare Part B and Part D if your income is over a certain level. So you definitely need to investigate how much income you can make without your Social Security being taxed, but also what are the tax brackets for that income related monthly adjustment that you could get on your Medicare premium. It's scary too, because there are things that can happen that you can actually fill out a form called the Medicare Income Related Monthly Adjustment Form. If you get the form and you can justify that that was a one-time event or my income is actually lower, but talk with your financial advisor, your tax advisor about your retirement taxation.
I saw you tense up and then relax, and I know we're supposed to help. These are introducing a lot of
That's a lot of information.
A lot of information, JB. It is complicated, and you think, well, it's money that I've earned, or it's money that is coming, but it definitely is worth talking to somebody schooled in this, familiar with these.
Get help, because a lot of times you think it's like working and you want to make all the money in the world while you're working. But once you retire, you have to have a strategy, because there are certain things that can really make your expenses higher than you expected that you could have maybe delayed.
Our strategy is having JB Bryant. Thank you, JB.
Thanks, JB. That's why she has that picture back there. Just take all the vacations and take a break. JB Bryant offers free weekly money seminars and webinars every Wednesday evening and Sunday morning. You'll find a link to all the information, WTVR.com/VTN.